FGV Land Lease Agreement, LLA. The Land Lease Agreement is part of FGV's land lease arrangement with FELDA since listed in 2012. If it is a lease, then shouldn't it always be a charge in the income statement? By definition, it should. However, fair value accounting means that the LLA can either be a charge or a write-back. So how is LLA calculated? Let's start with the basics. FELDA has more than 850,000 hectares of land, of which about 475,000 hectares are appropriated to small holders, and about 355,000 hectares are leased to FGV for 99 years, starting from 2012, under the terms and conditions known as the LLA or Land Lease Agreement. There are two parts to the payment terms of the LLA. The first is the fixed lease payment, which amounts to almost 250 million ringgit annually, subject to revision every 20 years. The second is a 15% profit sharing based on the profits from the sale of fresh fruit bunches on LLA-defined areas. The accounting treatment for this is based on fair value accounting in accordance with the Malaysian Financial Reporting Standards and discounted cash flow. Discounted cash flow, simply put, is the present value of total future payments payable under the lease agreement. The present value of the future fixed payment is easy to predict as it is based on a fixed figure. Whereas the present value of future profit sharing is more complex to calculate, as it is dependent on several variables. For example, crude palm oil prices, costs, and volume. We will illustrate how CPO prices affect our income statement using the fluctuating CPO prices in 2012, 2013, and 2014. In 2012, the CPO price 2,900 ringgit and LLA liability was 5 billion ringgit. In 2013, the CPO price fell to 2,300 ringgit, registering a lower profit and thus lower LLA profit sharing, reducing the LLA liability to 4.5 billion ringgit. The reduced LLA liability is written back to the 2013 income statement. In 2014, the CPO price went up to 2,400 ringgit for a higher profit and higher LLA profit sharing, increasing the LLA liability to 4.7 billion ringgit. The increased LLA liability is now a cost that is charged to the 2014 income statement. So, there you have it. This is a very simplified accounting example to demonstrate how the LLA charge or write-back is based on variables, whose movements result in a plus or minus in the income statement. And the reason why, even though the LLA is a lease, it isn't always a charge in the income statement. For details of the LLA, please refer to our latest annual integrated report available online.